If you are looking to build business credit, there are some things that may shock you that you need to know to be able to successfully navigate this process. And today we're going to talk about 6 of these secrets for building business credit that a lot of business owners don't know about, that if you get these right, will rapidly expedite your business credit building process. I mean, this is the key. These are the secrets that take you from years of building business credit and condense that process down to only months. So we've got a lot to cover. Let's dive in. So look, building business credit properly doesn't work like you think it is. And the reason for this is because a lot of people think that it's the same as building consumer credit. A lot of people that aren't familiar with business credit, which by the way is 90% of the business population per entrepreneur, it thinks that you follow the exact same process and that it's done exactly the same way as consumer credit. But that's not really the case at all, as you're about to discover today. As a matter of fact, that brings us really to one of the first secrets we need to dive into. Consumer credit can accidentally be built. And what I mean by that is, when I go to Target to make a purchase, every time they ask me if I want to save 20% and get a Target MasterCard, Visa card, whatever credit card they have. And I know that if I say yes and I get that credit card, that reports to the consumer credit reporting agencies. I know if I get a car loan, it reports to the consumer reporting agency. I know if I get a mortgage, it reports to the consumer reporting agency. Almost any kind of loan, credit card, line of credit that I get as a consumer, I already know by default that it reports to the consumer credit reporting agencies. But that is just not the case with business credit. With business credit, you have to be very intentional because it's the exact opposite. Whereas almost all credit that's issued to you as a consumer reports to the consumer reporting agencies, in the business world, only a very small fraction. It's estimated that as much as 97% of the credit you're issued actually doesn't report to the reporting agencies. So with that, the next obvious question is, well, how do you do that? How do you intentionally build business credit? Well, you've got to go through steps to establish a business credit profile. And then you've really got to start with credit issuers who will actually issue you credit. So there's 2 criteria to build business credit of credit issuers that you want, especially in the beginning. 1, you got to find credit issuers that report to the business credit reporting agencies. Way harder than you think. 97% of them don't report, and others that do report, like Capital One, report to consumer and commercial reporting agencies. So you got to find this very select group that report to business and not consumer. 2, when you're building initial business credit, you got to find credit issuers that will actually give you beginner credit. Look, a lot of credit issuers are not going to give you credit reports on your business credit reports without a personal guarantee, without a personal credit check, if you have no credit on your business credit reports. That's the catch-22. You need credit to get credit, but you can't get credit if you don't have it, right? So that's exactly what we're going to be decoding today, how to do this, because you've got to find credit issuers that report. You've got to find initial credit issuers who will give you credit even when you have none. And so how do you do this? What's the steps? Well, as I oftentimes talk about, look, the way that you set up your business really matters in this process. When you're starting to build a business credit profile and score, you have nothing on your credit reports. And so what happens is credit issuers are pulling these reports to make approval decisions, and there's nothing there. There's no history for them to look at. So with no history, they default to scrutinize you, your business, the way your business is set up, the way it's actually structured. It becomes vital to the approval process because they have nothing else to look at. So now you have a choice. You either structure and set up the business where it looks legitimate, credible, a business that a lender wants to lend money to and a credit issuer wants to issue credit to, or you make all these rookie mistakes that 9 out of 10 business owners make. The business doesn't look like it's legitimate. It doesn't look like it's credible. It triggers all these red flags in the computers of the credit issuer. And then the end result is that you get denied. So this fundability and how you structure the business really matters. You've got to set up a fundable foundation. You've got to set your business up where it is lendable, where it's fundable, where lenders want to give you money. So you've got to have an EIN number. You want to set up the right entity. You want to avoid sole proprietorships. You want to be a corporation preferably. You want to make sure that you have a separate business bank account. Credit issuers aren't going to ask for this, but they'll ask you for business bank references. So if you don't have a business bank reference, then you're not going to typically get initial business credit. Well, the only way you get initial business credit is you have a business bank account set up and you can provide that actual bank reference. And you need to manage your bank account properly. This doesn't matter a lot with credit cards because they're not typically looking at your bank statements. But when it comes time to get money, loans, credit lines, they're really going to scrutinize these bank statements. They want to see more money going in than going out. They want to see that you've got a bunch of regular transactions instead of a big rare transaction here or there. They want to see you don't have non-sufficient funds and that you got positive ending bank balance at the end of the month. So getting yourself the ability to accept credit cards and having that on your website, all these things go a long way to actually giving you that credibility. Again, my advice here is when you fill out an application for a credit card, loan, or credit line, every single line item, you need to just stop and ask yourself, is the answer that you're putting there, does it make you look credible? What's your entity type? Sole proprietor. Is that really credible? Have you looked at how sole proprietors are looked at? If you don't have any IN, does it make you look credible to not have any IN? Does it make you look credible to use a mobile phone instead of having a business phone? Or does it make you look credible to be using your home address versus a business address? Every item that you fill out, make sure reflects that your business is set up legitimately and credible. And that brings us to your contact information. This also can be a hindrance on your ability to get credit, because they're looking to make sure you're a legitimate, reliable, credible business. And a legitimate, credible business has an email address. That's a professional email address. Let me give you an example, okay, of this. I just had somebody solicit us today to buy lists of leads from an event called Traffic and Conversion. But when we looked at them, when we looked at their email, when we looked at their contact info, it didn't reflect that they were credible. It didn't. And so I went back to them and said, look, we're not interested. And they came to me and said, be honest with me, is it price? And I said, no, it's not price. It's your credibility. It doesn't check out. And that was it. And they immediately responded and said, well, what are you talking about? What's wrong? And I left it blank. I'm not wasting my time anymore. They're not somebody I'm going to do business with, but they were selling me something for $700 that they just lost at least one sale for me because they didn't have this stuff in line. It didn't pass the initial credibility check. So this isn't just for lenders and credit issuers. This really has to do with the general appeal consumers have about your business. This is the checks that you and I both know we do with a lot of places we do business with that we just don't publicize that we actually do. Okay, now actually Sherry said, yes, this live is available. It'll be available later on Facebook because that's where you're watching it. And by the way, Sherry and everybody, if you're watching this and getting value, hit that like button, hit the love button, hit the share button. It's the one thing I ask you if you get value when you're learning things from this training. So again, not having this right will not only cost you loans, credit lines, or credit cards, but it's also going to cost you customers because we're all kind of going through the same credibility checks to make sure those that we give money to or we do business with are actually legitimate and credible. Okay, so have a business phone number, not a mobile phone or a home phone. Have a professional business email address that matches your domain. Have a physical business address or get a virtual office through Regis DaVinci or even Alliance. Those things will go a long way to making sure you're credible. You even want to make sure that that phone number is listed in 411. Again, this is a basic check that a lot of initial vendors will do that if you don't pass, they're not going to issue you initial credit. So make sure that your business is structured the right way where it looks credible. Make sure you have a DUNS number. Look, you can build business credit without a DUNS number. And I'm actually kind of shocked by the amount of people that ask this question. In our group that has 50,000 plus people get business credit, a commonly asked question is, hey, do I need a DUNS number to build credit? Hey, I'm getting approved without the DUNS number. Can I continue to apply to get more credit without it? The answer is this. When it comes to fundability, 125 factors we've decoded are part of fundability. Everything from the basics we've talked about so far to how you manage your bank account, how well you manage your tax returns. All these things are included in fundability. A DUNS number is one of the basic elements of fundability. If you don't have a DUNS number, you don't look nearly as legitimate or credible as a business that does. But here's the catch. Everything I've mentioned in fundability and DUNS number, you can get approved with some sources without this stuff. And that's where it's deceptive. That's where you get fooled. You go get a Uline account not without a DUNS number, and you think everybody will approve you without a DUNS number, but that's not the case. There's 9 out of 10 other vendors that won't approve you without that DUNS number. You go use a home address and you get an Amazon credit card. But then you try to get a Walmart credit card and you get denied and you don't know why. Well, the reason is because Walmart will not accept home addresses as business addresses. So with fundability, you can slip under the radar, and some sources will approve you without this and some sources will approve you without that. The vast majority will deny you because you don't meet some or all these requirements. So by making sure your business meets these requirements is fundable, that's what's going to get you max approvals. And denials are what take a months long process and make it years, because you get denied, you get denied, you get denied, you get denied, you get approved, you get denied, denied, approved. If we want to condense business credit building, we've got to get rid of the denials. We've got to get more approvals. 9 out of 10 should be approvals, not denials. And we do that by building the business where it's fundable, where it meets all of the credit issuers' requirements, and we're not missing things that miss a lot of their requirements. So a DUNS number is one of these. I'll give you a simple example. I went in and applied for a Staples business credit card and was denied. It made no sense. I had enough payment experiences. The business was set up fundable. So I contacted him and said, why would you deny me? I've got established business credit. My business is set up where everything is legitimate and credible. And they said, no, you don't have any established business credit. Of which I said, yeah, I do. You've been given the correct information with the company it's under. Would you like me to supply my DUNS number? And they said, yes, please do. I gave them my DUNS number, and within 3 minutes, the person jumped off the call, jumped back on, and approved me immediately for that credit card. So what's the difference? The difference is for some reason, they couldn't locate the business credit history, and the DUNS number is what helped them identify it. Ever since that day, I supply the DUNS number on all applications for credit and financing, whether they ask for it or not, because it doesn't hurt me to have it, and it gives me a lot of credibility when I do. So make sure you get the DUNS number. Yes, some starter vendors will approve you without it, but most require it. And as you continue through the process of getting credit lines, credit cards, and loans, having a DUNS number becomes absolutely crucial. So Corey says, hey, Ty, I just did my business trades yesterday in Granger and Uline and one other company, and they all checked my business address with D&B. You are correct. Thank you. That's awesome. And all 3 were approved. Congratulations, Corey. I'm really excited about that. And that is exactly what happens when you set up your business where it's fundable, is you start getting approval, instead of getting the majority denials, which slows it down. And hello from the Panhandle. Hey, if you don't mind, tell me where you're from. I always like to say hello to everybody, especially when you're giving me a shout out from Florida. So hello from the Panhandle. Thank you very much for tuning in. So you can go to creditsuite.com/DUNS to get your DUNS number. You don't need to put the dashes in, just DUNS. You can go to dnb.com. I just give you a short link right to them at creditsuite.com/DUNS. It's about a 10 to 15 minute process. You should have the address, phone number, entity, EIN, all set up with the correct information before you get the DUNS. This is where people screw up, is that you got to get your address, your phone number, everything right as we talked about, then go get your DUNS, then update your Secretary of State. So all of that information is congruent. It's a 10 to 15 minute process, free to get DUNS. You'll get it in 3 days to 3 weeks. They'll call you and try to sell you their credit monitoring, credit builder program. You don't need it. If you don't want to get sold, don't take D&B's phone call. I guarantee you that the only reason Dun & Bradstreet is ever going to call you is to sell you crap you don't need through their credit monitoring platform. And they're good salespeople. I mean, literally, they almost sold me, and I recorded the call and let them know the call was recording so I could even use it for training purposes, which I've done with our audience. So again, if you don't want to be sold, don't get on the phone with D&B. You don't need to buy anything to get the DUNS. Never be deceived to believe that you do. Okay, secret number 5. Not all credit accounts are going to report, because we talked about here, 97% of trade vendors do not report to the business credit reporting agencies. And some of them will actually report the credit history on the consumer side. Look, this is even worse with loans and credit lines. When I apply for a credit card, when I apply for a loan or a credit line for the business, 100% of the time I ask, where do you report my payments? And if they don't report my payments to any business credit reporting agency, then I typically don't apply if there's another option that will. If I'm looking at 2 cash flow financing loans and one reports my payments to DMB and one doesn't, and almost everything else is equally equivalent, I always go with the one that reports. And sometimes they tell me blatantly, well, this reports to TransUnion on the consumer side and Experian on the business side. Well, I don't want it then. If you're going to give me funding or credit for my business that reports on my consumer credit reports, then you don't really understand my needs as a business owner. So I always ask the question of where they report. And again, you got to be conscientious to make sure that you're getting credit that actually reports to the business credit reporting agencies, because that's what's going to give you positive payments. That's what's going to raise your score. That's what's going to help you get more money. Look, I talk to a lot of business owners that say, look, I don't want to get a credit card because I could pay cash. I could pay cash too. We spend $100,000 a month on advertising, and we have the money to spend every month on that advertising because the advertising nets return on our positive return on investment. And so we have the money to be able to pay that. But here's the problem. If I use cash, if I use a debit card, if I use an ACH to pay that $100,000, nobody knows I'm spending it. But if I use my Amex card for the $100,000 and then I pay off Amex before interest accrues, same thing. I basically paid with cash. I used my credit card, but I didn't accrue any interest. But here's the deal. Amex reports it on my business credit reports. And now everybody else can see that I'm spending that $100,000 a month with Amex. So now when I go to get a $100,000 credit line, it's way easier for me than the person that's using a debit card or an ACH to pay every single month because nobody knows they're spending the $100,000. The reason I tell you this is that you want to get credit with people that report. If they don't report, nobody sees you're getting credit for this. And we get these calls all the time. One of my buddies, John, called me, and this was 2 years ago. He said, man, I don't know what to do. My credit line I had issued, my bank called it due to damaged business credit. I said, John, let's look at this. We looked at his business credit report. He had no business credit. I said, John, you got nothing here, man. There's nothing on your credit report. He goes, that's not even possible, man. He goes, I buy millions of dollars in media every month from all these media companies, and started listing them all. And I said, but John, none of them report the payments to a business credit reporting agency. So nobody else sees that you're doing that beside the person that you're paying. That's the problem. We've got to create this history showing these timely payments that we're paying all this stuff. Because in doing so, that's where other credit issuers and lenders want to be able to give us money. So again, you've got to find accounts that report. And if given a choice, you want to get accounts that report versus ones that don't, because that's the key to building this extensive business credit building history. And that is the key to getting credit lines, getting loans, and being able to get credit cards as well. It's why you should monitor your business credit reports. It's why you should always ask lenders, credit issuers as well, if they do report. And it's why as you build business credit, you should work on building at least a handful of initial accounts on your credit reports or credit reports. That way you have good credit scores. Without that, the problem is you're just not going to be able to get approved, okay, for a lot of different kind of credit financing because you don't have an extensive enough credit history. Do you want to get away from personal guarantees? This is why they happen, because they pull your commercial credit report and they don't see very much of anything. And then they're like, why would we give this person credit based on the business when the business doesn't even have a history of paying its bills? Now, if you look at the flip side and you give me a business with 10 different accounts on it, now we've got a history of paying our bills. Now the credit issuer, the lenders, their computers can see that we've got good scores that reflect we pay our bills on time, that credit issuers are giving us credit, that we're using this credit. And that is the key to being able to get credit and financing. Look, you can't go out and get a $300,000 car loan if you've never had a car loan before. But as you get car loans and you move up in the world, you eventually can get not that you want to, but you can go get a $300,000 car loan. You can't go get a mortgage if you've never proven that you have a credit history that you pay people as agreed. But when you build a credit history, you can get a mortgage. So this is exactly the same as it is for personal financing as it is for business credit as well. And look, Cruz, New Mexico. Hey, George, awesome. And I was just in Mexico last week, as a matter of fact. April says, Ty, do you know anything about 5-star processing? I'm not really sure. I've heard that name, but I don't know enough to speak out about that. And again, you don't mind, tell me everybody where you're from. I always love it when you type in the chat and say, hey, I'm from this place, so I can give you a shout out and hello. Okay, so secret number 6, you have to apply for accounts in a certain order in order to get approved. A lot of people try to start with the main kind of accounts. I'm still shocked at how many people say, Ty, I saw your trading and I went into my bank and they denied me for a credit card that reports to the business reporting agencies without a personal guarantee. Of course they did. You don't have a credit history for them to look at. You've got to build a credit history. And this is the secret of all secrets about building business credit. If you go to Staples, if you go to Office Depot right now to get a credit card, they will tell you right at the top of their application, you need to have 3 years time in business and $1 million in revenue to apply and get approved. It's 100% inaccurate. We have found again and again and again and again that credit issuers are really looking at the number of accounts you have on your business credit reports. The greater the number of accounts on your business credit reports, the more tiers of credit will approve you through the actual business credit building process here. And I'm going to actually show you exactly what I mean by this, because we are the biggest in the business credit building space because we understand this one simple concept. We understand this concept when so many others don't, which is the fact that business credit building really has to do with the number of accounts you have reporting. If you have the wrong number of accounts reporting, then what will happen is you will get denied. But if you have the right number of accounts reporting, you'll get approved. That's why when you look at our business finance suite that our clients use with our advisors to build business credit, you'll see start here, tier 1, start here, tier 2, tier 3, tier 4. The tiers are simply based on how many accounts need to be reported on your business credit reports in order to get those accounts. Some require 3, some require 5, some require 9, 7, 14. But the tiers of business credit building are all based on this one thing. How many accounts do you have reporting on your business credit reports, or you can't move? And we even say right here, hey, welcome. Your goal is to get at least 9 accounts reporting on your business reports past tier 3. You cannot, you got to get 9 at this point to move to tier 4. We're telling you exactly. Now, you don't hear me talk about 9. You hear me talk about these groupings. You need 5 to get to retail credit, 8 to get to fleet credit, 14 to get to Visa card, MasterCard. But with our clients, we really break it down to a sub-tier level because it really has to do with is the controlling factor of being able to get approved or denied for credit or financing. So you've got to get these first handful of accounts initially reporting. And then the more accounts you add, the more types of accounts actually become available to you. The more Staples now becomes open. Amazon now becomes available. Best Buy now becomes available. Apple now becomes available. It's all based on these number of accounts you actually have reporting, okay? So here's a quick rundown of what it takes to be able to build business credit. First, you establish that credible foundation. You set up your business where it's fundable. You get your DUNS number to set up your reports initially with Dun & Bradstreet, Equifax, Experian. Now you move on to these initial vendor accounts. We call them starter vendors, a Uline of the world, a Granger of the world, a strategic network solutions of the world. They change all the time. People ask, why don't we publish lists? Because we literally have a list building team, and all they do every single day is they call every single one of these credit issuers to verify the information. So when our clients go to apply for Crown Office supplies here, they know they'll get approved. And if they don't, if they change their requirements, then we move a place back in the tiers. Crown used to be an initial starter vendor. Now you can see here that we have them as tier 3. So our data team every day is moving these accounts from tier to tier to tier based on the ongoing requirements that the credit issuer has and the changes in those requirements. They change all the time, but the formula is the same. Build the credible foundation, become fundable. Get set up with the reporting agencies by getting your DUNS number. Then get initial accounts that report to all 3 reporting agencies, DMB, Equifax, Experian. Then continue to build. If you're doing it on your own, it's trial and error to see what you apply for and what you get denied or get approved for. If you're working with us, it's obviously simpler. Our advisors help you avoid pitfalls before you fall in them, and we tear everything down to the exact accounts in what order you can get approved for. The bottom line difference is that our clients that work with Credit Suite get 9 out of 10 approvals, and the people that are not are getting 9 out of 10 denials, and it's just trial and error. It's okay either way. It's time versus money. You spend the money to work with us and get faster results. You do it on your own and dedicate more time and don't get the results as fast. In every business, in life, you got to choose between time and money. It's okay either way. You get the results. It's just a matter of any given time and what's important to you, the time of the money. And Tanya, hello. Thanks for coming in from Chicago and Montgomery, Alabama. Thanks for coming in as well. Went to space camp back in the day in 8th grade in Alabama. So again, to recap, a lot of important things you've got to keep in mind when you're building business credit. You got to get credit with credit issuers that report. You got to build that credible foundation. You got to make sure that your information is congruent online, which we didn't even talk about. And you got to make sure your contact details, like your email, your website, your phone number, all reflect that your business is credible. You've got to make sure that you're building credit in this specific order. And one more secret I'll throw in is you got to be really careful listening to novices. When we had our group and created it, and we had about 20,000 people in our group get business credit, somebody mentioned my name and said, "Hey, why don't you correct all the misinformation here?" And my response is because I don't have enough time in my day to correct everything here that's wrong. The reality is that, and don't get me wrong, it's not a bad thing. I'm a believer of openly sharing to help people. My life is based on sharing to help people. Okay, it's my obsession. So when I accomplish something, I want to share it and tell people how I did it. But here's the problem. When I go to get a credit card and I succeed and I tell you how I did it, what I did and how I did it only worked for me. Corey Gray said the same thing. Corey was on here and said, "Hey, I followed your advice and I got 3 accounts." And somebody immediately responded and started asking Corey questions about how Corey did it. Here's the problem, okay, is if you come in and you find out how Corey did it, what you're going to realize is that what Corey did to get results is not the same as what you're going to do to get results. And I said Corey Gray, but it's actually Corey Goree. So that being said, that is the problem, is that when you listen to people about their own success, what worked for them ain't going to work for you. I know that because we've helped 50,000 people through this process, and we found the patterns of what works and what doesn't. And we found that sometimes what works for one person just doesn't work for the other. They're in different industries. They got different time in business. Their fundability is set up differently. So some things to keep in mind. Now, next time, this week, we are going to cover more about the business credit building process and how this works. We're going to dive in and talk about starter vendors, and I'm going to give you exposure to ones you probably don't even know exist and ones we haven't really talked about before. And we're going to share some of the top ways, tips, and tactics to be able to build business credit using these initial starter vendors. If we can help you along the way, make sure that you get in touch with us and let us know. You are entitled to a free consultation with us. You get your business credit reports at no cost. They cost $250 from the Bureau. We get them for you at no cost. We give you tips and tactics to build your business credit. We also come in and do a fundability assessment to help you fix what's wrong with fundability. And we do a funding qualification to tell you all the money you can qualify for right now. It's 100% free. And all you have to do is give us a call at 877-600-2487, email info@creditsuite.com, or schedule online at creditsuite.com/consult. And if you got value here, like and subscribe. By liking, you tell the social channels to welcome other people to this so they can get quality information without being sold something, right? And then also you subscribe. What happens is you get notified when we go live. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. We have hundreds of videos on our YouTube channel. Now thousands of videos on our YouTube channel. We release daily tips on Instagram, Twitter, now even regular content on TikTok as well. Okay. desperately trying to become TikTok famous to impress my daughter. It's working slowly, but not fast enough. So help me become TikTok famous so she thinks I'm an awesome dad as a result. Okay. And we've got a podcast called the Business Credit Financing Show where I do something I don't do anywhere else. I bring in experts to teach you how to start a business from scratch and grow it to be successful, how to brand, how to market, okay, how to maximize profit, how to handle the finances of the business. Everything you need to grow a business, we cover in our podcast, The Business Credit Financing Show. All of those links you can access at the top right of our page, which is creditsuite.com. Okay, that being said, Corey says, I have at least 20 people that say they have all the right info, LLC, business bank, and EIN, and never knew about this. Yep, and that's exactly what we run into a lot as well. Most people, I'll give you an example. 9 out of 10 people we do an initial consult with have wrong information with the Secretary of State. The first check we do of 125 fundability factors, the very first thing we look at, 9 out of 10 fail that one check. 9 out of 10 failed check 1 of 125. So a lot of people have this wrong because they do things out of order. Go back, check the things we talked about today. Make sure you're in line because you're going to need it, because in our next training, we're going to talk about the starter vendors you need to get to continue to build the business credit building process and to establish that initial credit profile and score. So thanks for tuning in. I look forward to seeing you on our next training where we talk about more cool ways to get money to start and grow